Hello traders, and welcome to another weekly Forex forecast. As you can see, we have started with last week's recap, some of our forecasts that went into our favor, and in this week we are gonna see potentially a lot of volatility coming in the market. The cycles have been actually reaching at a critical stage in terms of the indices as well, so we're gonna have a look at each individual instrument one by one, starting with the dollar index. As we have said from the last week, we have been expecting the continuation higher to at least 104,500 area, which was reached. The reaction from this area, it's corrective, so we can still see continuation to the upside towards 105 area at least. So potentially we can start with a small drop entering the week, and then potentially from Tuesday we can start seeing the reaction higher. We do have some high impact news on Tuesday, which is the CPI. It may surprise many traders, so this is what we can see next for the dollar index. For the dollar yen, as we have said last week, we have expected the pair to continue higher towards the 149,500, 150 area, which is still extending higher. Potentially we can see a small drop entering the week and then continuation higher to reach that level. At this stage, obviously, the pair has been in an extended cycle from 28th of December. So if you are not long from any of those levels, you can wait for this as your risk to reward ratio is getting smaller as the price goes higher. For us, we still expect the pair to continue higher. We are not looking to sell the dollar yen by any means at this stage, especially for the next week ahead. For the euro dollar, we have expected last week to still see continuation lower. We have been saying from this area that euro dollar will reach at least the 107 area, which, as you can see, came very close. The reaction from this area, it's very corrective, so we are expecting some reaction here a little bit lower, maybe a push higher, and then we should still continue to the downside. We do not see any signs of reversal in the pair. We could potentially visit the 106,500 area as well towards this area right here. So we are not interested in buying the pair. It can continue to extend lower for the next week ahead. For the pound dollar, we have expected this drop, as we have said, towards the 125 area, which was reached very nicely. So right now the pair is reacting, it's bouncing higher in a corrective way. So after we broke this range and we saw this sharp drop lower with this correction right now, we are expecting maybe a small drop, maybe a push up, something to complete this structure, and then we should still see continuation lower for the pound dollar, as we are expecting the dollar strength to continue carrying over towards the next week within this cycle and dynamic. So we are not interested in buying. We are only looking for this drop. For the pound yen, we have expected last week from these levels to see a drop and a push up and then another drop. Instead, the pair has extended higher. Right now, it has reached the Fibonacci extension area from this cycle right here, from this up wave, the correction and the up move. We should be cautious chasing the pair higher. We can expect some weakness in the next week ahead, the next 2 weeks potentially, with a reaction lower to be favored still. So do not look to buy this one. We are not interested. The cycle from December right here, it could have been ending very soon. So 2 weeks ahead, we have been saying that the pair can give us a small ending structure before the drop. So instead it has dropped, it has rebounded, and then with this area we can potentially see more sellers coming, and very soon we can see this drop. So buying from this range is very risky, very dangerous, so we like to stay ahead from the long side, and this is what we can expect coming next. Now for the EURUSD, we have said from last week that we can see the pair giving us a messy correction right here, which this is what is actually happening. We have said that as long as we are above the Fibonacci extension area from these lows right here, we are good to go up. However, this was expected to get like a choppy corrective structure. Now, as long as we are above this red line right here, okay, we can see a small bounce and drop, and then we can see an up move happening very soon. So we are not looking to sell EURUSD. We are only biased towards the upside for the next week, the next 2 weeks ahead. At some point, we should be turning higher, which is the highest probability chance as we are presenting to all the instruments. So we are not going to be looking for any sell setups as long as we are above the red line right here. Okay. Now for gold, as we have been saying in the last few weeks, we were biased towards the downside from these levels right here. We got the drop, we got the correction, then we got another drop, another correction. So now we are getting another drop. As we have said, within this cycle and dynamic, the dollar is still supported. So gold as well should be remained towards the downside in a sideways way. So what we can see next week is maybe a small bounce, but it should fail and we should see a continuation lower. As far as we're below those highs right here, gold should be aiming towards these lows right here, towards the 1980 area. Before we see any bigger reaction happening, and especially as far as the RSI trend line right here is holding and is trending to the downside as well. Now for oil, as we have said, we have got this corrective bounce towards the Fibonacci extension area, and we have got this strong reaction to the downside. The price trend line has been giving us a bounce. However, as long as we are below the red line right here, the previous peak, and especially as long as we are within this Fibonacci extension area, oil is not bullish and it's still biased towards the downside. We could potentially be turning lower sometime within the next week or so. So we are not buyers for oil at this stage in this cycle, which we have said previously. We can still see many indicators that point towards lower prices. Of course, the long-term analysis is not covered on the free YouTube videos, so this is something for the members that we're gonna start hopefully within the next few days. So as we have said, we are not interested in buying oil, especially as long as we are below this area. There is an alternative scenario which it might play out. So this should be the alternative scenario. We can have a double correction. From here we can do something like this, go up again, and then we can drop. So both possibilities exist right now. However, below this peak, we are good to get some consolidation here and get the next drop sometime within the next couple of trading days. Now for the S&P 500, as we have said the last week, we have been entering into an ending structure type of price action. The index has pushed higher again towards the 5030 area. As we can see, we are forming a wedge, okay? A wedge price action right here, which is an indication when we are approaching an end to a cycle, which in this case it's the cycle from the 27th of October 2023. We have been saying from this area right here, we are not interested in buying S&P at those prices, even though it could have still pushed up a little bit more higher. The bigger direction move from this area was for us to the downside. This correction could be starting anytime from this week onwards, especially when we have the CPI on Tuesday. It's going to be a highly volatile week for the indices. Okay, we are still within the RSI divergence. There are also other factors pointing towards potential end of this cycle. So we are not buyers for the indices for the foreseeable future. This is something that it is expected. We could revisit the lows from the beginning of January, and then we can see what we can expect next. I have decided to include the US 30 in this weekly forecast just to indicate for you guys that one of the indices, which in this case is the US 30, it's pointing towards the ending of the cycle. As you can see, it has been within this rising wedge, which is indication again when the cycle is approaching to an end. It's respecting very nicely the divergence here on the RSI. Okay, and as you can see, it started to give us signs of weakness during the Friday session. Okay, so we could expect any time within the next few days in the beginning of the trading week to break below this wedge. Okay, and we should start aiming towards the lows of January the 18th right here as a first target to the downside. And lastly, from the ETFs, the triple Qs, very similar to the S&P 500 and the US 30, it is forming an ending structure and a rising wedge, as you can see. So anytime within this week, we should be expecting some weakness to arrive in the triple Qs, and eventually we will start seeing this break to the downside and the correction towards the January, the fifth lows towards the 395 area. So we are not buyers in the indices or the ETFs and the triple Qs. We are expecting this correction, and then we can evaluate what can happen next. Okay. And lastly, I would like to point out for those that already trading with our main partner broker, One Royal, at the end of February, you will receive your monthly cashback, as you know, which is calculated based on your trading volume. You are saving between 15 to 20% of your trading cost. All the account types are highly competitive. They have a very low spread or commission depending if you are using the classic or ECN accounts. And on top of that, you are receiving the 20% cashback. So in reality, you are having the lowest trading costs you can find with one of the most established brokers that they do welcome profitable traders, and they have more than 15 liquidity providers, as you know, and you're trading in the real market and not with the fake market brokers, as we have mentioned into the how to start trading first episode. So with that note, guys, I wish you a great weekend and a great week ahead. In terms of trading, be cautious. We're gonna see a lot of volatility. We have the CPI report on Tuesday. It could surprise many traders, so just stay sharp with what we have said in this session and understand what can happen next, and you will be good to go. Cheers.